Optimism emergency update. The price is likely to drop below $1, and today I'm going to show you exactly why, because the technical analysis is just on point. So let's dive straight into Optimism. So we did our last video on Optimism on the 5th of September, so around a week ago. And what we said was the following. We saw this move down, and we said it's likely to be just the first leg, and then we should anticipate an A, B, C style correction. Really, really important. So now we're going to dive into what's happening with Optimism, because it looks like this has unfolded just in a textbook fashion. And that makes it really predictable of what's very likely and highly probable to occur next. So look at this. Look at this. And if I just delete these lines that we just drew, look at this over here. It's literally done this A, B, C, just as we anticipated a week ago. And that's the real thing to really take away from today, is that the markets move in 5s and 3s. 1, 2, 3, 4, 5 is pretty common. And then what follows typically is an A, B, C correction. But what do we have here with Optimism? And this is important. We've got a 5-wave sequence at the downside, 1, 2, 3, 4, 5, which is this part of the market. What typically follows a 5 on the downside is normally typically a 3-wave correction. These are quite common. Doesn't occur all the time, but when they do like this, then we want to be on high alert. So this gives us valuable information on what's likely to occur next. Also keep in mind, Optimism seems to be mirroring Ethereum. You know, if you look at Ethereum price action and Optimism, they look very, very similar in many degrees. Not identical, but similar. So let's just do some updated analysis on this to see what's likely to occur. So what do we have? What do we have? Well, we have pattern, right? We've got an A, B, C correction. We've got Fibonacci time. So most corrections take a certain amount of time to correct. I've covered that in the last video on the 5th. But the time it takes this to form, we've got these two ratios over here. And this is literally on the typical maximum date, which is the 10th of September, right? That's what we said. We actually said the 10th of September. It doesn't mean it is the top, but it's likely to be. So we've got price, pattern, time. Well, the price we're going to cover in a bit more depth. But look at the momentum position as well. What do I mean by momentum? This is a momentum indicator, and it can be very useful for us, especially if it marries up nicely with the tops. So if we just look at this, how useful has it been in the past? Blue line goes below the red. We got this top over here. Blue line goes below the red. We got this top over here. So it gives us an indication that the momentum, the rate of change, is turning. So this has just gone below the red. So it indicates we might have a top. So now we've got pattern, we got time, and we got momentum. We want to do a bit more on price. So I'm just going to, because Fibonacci price is really, really important. So it is important to note that most corrections typically hit 50%. This correction has not. It has not gone to $1.60, right? That's $1.60 here. So it's only gone up to, what was it, $1.47. So it's close, but not quite there. So we're going to take that into account. The ideal is that it would tag the 50%, but you know, the markets don't owe us anything. That's just the rate of the markets and the nature of the markets. So what I'm going to do now is I'm going to just do a couple of other bits on this part of the market. So we can get rid of, we'll keep the 50%. I'm going to add in the 38.2, which is the not so common minimum, right? It's common in a particular sequence, but not this one, but we can be aware of it. I'm just going to do an alternate price projection. This one basically measures the length of wave A, project it from the base of B, and wave A's and wave C's often equal each other, right? They're often 100% of one another, and we can see that ratio is over here. So that's quite significant for us. And then last but not least, we'll do something called an external retracement. This just adds a confluence of events that just gives us a better indication on, is this top likely to hold with the information that we have in hand? And then you can make a decision on what you want to do with this information, right? Depending on what your strategy is. If you're just buying and holding Optimism, it might just be just to prepare for sideways to down. And I'll show you what's likely to happen after sideways to down if that does occur. Now, you often see me put a question mark here because it has not been confirmed yet, right? It has not been confirmed. We'll just leave it as orange like so. Okay, so that's all good, all fine and dandy, right? So we can now get rid of these lines. We'll keep these lines over here. So now what we're going to do, just to finish up with Optimism, is what's likely to occur. right? So we've already identified this is likely A, B, C. These are the ratios. That's quite typical because we've measured this low to this high, and these are the retracement zones, 62% and 78.6. 78.6 tends to be the typical maximum correction for wave twos. However, we can now measure this wave, and just the way we've done it on an ABC on the way up, we can do the exact same thing for the way down. It's called a higher degree wave count. These are degrees within the wave B, and here we're going to go over here as well. So I'm covering a lot of depth. I know it's a bit of detail, but it is what it is. Oh, by the way, yeah, that's what I want to tell you. Next week, this week was Monday now, right? Early this week, by mid this week, I'm going to be launching my crypto trading masterclass covering my 4 secrets. Well, the secrets I'm covering with you right now. There's momentum, there's pattern, there's price, and there's Fibonacci time. And when all 4 coincide, that gives you a very high probability edge. And your job is to trade that edge consistently. So that's going to be coming later on. So subscribe to the channel. I'm going to be bringing that to you. I'm going to give it to you for free, by the way. It's a free masterclass. So now what I'm going to do is I'm just going to measure this low over here. I'm going to project it from here. Now we can see this is quite low down here. So it's unlikely to go this low. However, the typical minimum is 62%. So now this becomes a really high probability zone. Let me just get rid of this. It's unlikely to go there. It can go there, but it's unlikely. So the high probability outcome for Optimism is a price range of, so I said below $1, right? This is why. This is exactly why. 84 cents to a typical maximum of 70 cents. That's being conservative because of the way the price structure, the buying and selling behavior is playing out. This is quite an aggressive wave A on the way down, quite impulsive to the way down over here. So this normally mirrors a degree of this. Normally identical, but here it might not be identical, it might be shorter. I'm also going to give you a date, right? So we're going to do something quite cool here. It's called Fibonacci time ratios. I'm going to keep it quite simple today. The thinking is, and this has been trial tested, proven, is how long it takes this wave A to form is often similar, if not identical, to how long it will take this wave C to form. So what we're simply going to do is just literally measure the time taken. So if I just do this, I'm going to measure from here to here and then project it forward from over here. So TradingView is the software that we use over here. It allows you to click on, it's called they call it the trend-based fib time. So we're going to just click this high to this low and then project it from this high over here. And the ratio that we want, we will keep an eye on the 62%, but the more important one is this 100%. So by the 3rd of October, so that's around what, 3 weeks? 3 weeks, give or take, that we should anticipate that this correction should complete if this low gets exceeded. And it is still ifs, but it's really important to note that the momentum, look at the momentum indicator, is bearish. So now we've got a momentum indicator that's been quite consistent in terms of measuring the momentum, the rhythm of Optimism is bearish. So sideways to down for at least the next few days. We got pattern. We could go to a low degree time frame, which I might actually just do. I think I've got time to do it. We've got time and we've got price, right? We've got quite a few factors now. So actually, let's just keep on this chart. We'll just go to an hourly chart. What I want to see is this can help us. If you're trading Optimism, this can be quite useful, right? And it can help you avoid getting into the market at the wrong time. Okay, so what I'm looking at here, there's a lot of information on the chart. What I just want to just do is I just want to look at this part of the market. Okay, this over here is what we're referring to as the wave C. And what we can deduce from this is this wave C complete, or should we anticipate one more leg up? Now, looking at this, actually, it's probably likely we're going to get one more leg up, and I'll tell you why. Because wave C's tend to break down in 5 waves. And here we've got a clear wave 1, looks like a wave 2, and it looks like a nice wave. I mean, we could argue it could be a wave 3, 4, 5, but it's more likely there's going to be a 1, 2, 3, because this looks like a corrective structure of a wave 4. And if you see a corrective structure like this, normally you get one more leg to the upside. Doesn't mean it's going to happen, it's just more than likely. So what we'll do is we'll just look at the momentum. Just want to have a quick look at, just doing this live. Yeah, so we just want to be aware of this. Is there any, I'm just going to double check a couple of things. I'm doing this live. I'm not actually trading Optimism. I'm just doing this because quite a few of my community were asking me about Optimism. So I just promised I'll keep them in the loop. So I'll keep you in the loop on what I believe just the TA is looking like with Optimism. So I'm just doing a quick breakdown of a couple of things, trying to see what's likely to be the case. Yeah, it's like what I'm looking at as I'm just doing this is this part of the market looks corrective. So here is impulsive, right? You got a new high, it doesn't overlap, new high, it doesn't overlap, a new high. But now we've got this overlapping structure. So this looks like some type of correction. So this is likely to be a 1, 2, some type of 3, some type of 4 occurring, and then a 5. But I'm getting carried away now. I'm getting carried away. I'm gonna not go into too much detail there because I won't be able to do daily updates with Optimism. So the main thing on a macro scale is that what we're looking at right now is at or near a wave C potential high. We got a question mark because it has not been confirmed. Price going below this wave B will be the confirmation. And if it does, it's likely to get into this range over here, below $1 and towards the 80-cent mark. So we'll keep a close eye on Optimism and see how it unfolds. But let me know what you think. Do you think it's going to go down? Do you think it's going to hold? There you go. There you go. Let's read a quote from my book. Let's go. You can now download my book for free as well. It's in the description link. Help you get your mindset right because, most of the game of money, the game of trading is actually psychology. It is actually psychology. So let's go with, I'm going to go with chapter 5. Chapter 5 is it's Leonardo da Vinci. It's Leonardo da Vinci, chapter 5. Simplicity is the ultimate sophistication. And what I aim to do is, 1, avoid watching the news, right? The news is designed to throw you off. So you're always going to be 2 steps behind with the news because, it could be there to there to there. I always found technicals was much more powerful and easier for me to really leverage. And then I just used 4 technicals. We got double time frame momentum. We only looked at 1 time frame really today. We got pattern on multiple degrees of counts. We did 2 wave counts today. We got Fibonacci price and we got Fibonacci time. It doesn't mean it always lines up perfectly, but it gives you enough of an edge where you're the casino and then you can make logical business decisions with the probability in your favor. But always keep in mind, there's no guarantees, so you always want to have proper risk management. So subscribe to the channel if you found it valuable today. My masterclass is coming later on this week. I think you're going to love it. I covered the 4 secrets of crypto trading. It's going to blow you away because when you can stack these odds in your favor, it will separate you from pretty much the crowd that tends to lose 90% of the time. All right, see you soon.